Stephen, can you give us some insight of capital gains tax and the issues that should be considered from a taxpayer perspective?
Okay, capital gains tax has been with us since September 1985, so it applies to any assets purchased after that date. It's basically the profit you make when you buy and sell an asset, i.e. buying and selling shares or property. To work out the capital gains amount, we look at the actual cost of the asset, which in case if you're buying property would be the cost of the property, but you also add in the costs of acquiring the property in terms of stamp duty and legal fees, and you look at the difference between this amount and the sale amount, and that gives you the capital gain. If you hold an asset for greater than 12 months, you automatically get a 50% discount on this gain, so it's actually more tax effective than normal income.
What approach can be taken to minimise capital gains tax for an individual taxpayer?
Because capital gains tax can be controlled, i.e. you determine when you sell an asset, you can easily plan when which tax year the capital gain is going to occur for you, and therefore you can align that with your other income to potentially reduce your tax liability or increase your expenses by, say, for a self-employed person contributing to super. In the year the capital gain is going to come through to reduce your tax liability.
What about capital gains tax and small business?
It's a very, very complex area of legislation. There are extra concessions for small business in relation to capital gains tax, and you'd be well advised to seek advice before you did anything in regards to a small business capital gain.
So in other words, you should get advice before you actually sell the business?
Absolutely, because we can never go back in time. Once you've signed a contract, that's when the capital gain effectively occurs. Therefore, you've locked in the situation. So before you sign a contract, you need to get advice to determine what's the best course of action.
And can you give us an example of where a client did not see you, but you found out about it afterwards and you could have saved them?
Oh, look, absolutely, especially clients signing contracts, say, towards the end of June, when they could have just waited a few weeks and signed them in a different tax year. For a start, it automatically defers the tax, but it just gives us planning opportunities in the following tax year.
So would you say clients basically don't understand there's a big difference between settlement and the contract date for capital gains tax purposes?
Absolutely, that's probably one of the biggest misconceptions with property transactions. It's when you sign that contract, not when it settles.
We hope today raised some issues with you, and more importantly, you may have some questions that need answering. If so, we've made it very simple. All you need to do is click on the link marked Book Your Key Advice Appointment, and we'll be in touch with you to organise a Skype interview.